Okay, so let's do day 9 monetary policy deep dive. So I actually already did it and I screen recorded it, but मुझसे delete हो गया. So I'm doing it again because of like the मेरे phone में space नहीं था. Anyways, so day 9 monetary policy deep dive. So the quick connect from previous days, day 4 पर हमने देखा था इन्फ्लेशन and how RBI fights it with repo rates. Day 6 was the full toolkit which RBI has, repo, CRR, SLR, OMO, and also there was this reverse repo, right? Day 8 was 1991 crisis that showed why strong monetary institutions matter. Today we go inside the room where it all happens. The Monetary Policy Committee, MPC. Who are these 6 people जो ये रेपो रेट और ये सारी चीज़ें डिसाइड कर रहे हैं? सो एवरी 2 months 6 people sit in Mumbai and decide one number, the repo rate. That one number affects your home loan EMI, your FD interest rate, whether companies expand or contract, whether rupee strengthens or weakens, ultimately inflation and GDP growth. So composition. So the committee has these members, 6 members. So RBI governor right now may be Sanjay Malhotra, appointed by government. Deputy governor from RBI, appointed by RBI. RBI officer from RBI, appointed by RBI, and 3 external members who are economists or academic people like appointed by the government. Now I wonder if RBI governor is also from RBI, but why then are they appointed by the government? I mean, they said 3 RBI plus 3 government appointed, but appointed by government are 4 and only 2 are from RBI. Why is it so? Anyways, 3 RBI plus 3 government appointed equals balance of power. Each member has one vote. Decisions by majority. Governor has casting vote. Decisions by majority. Governor has casting vote. If tied, external members serve 4-year terms, cannot be reappointed. Each member has one vote. Decisions by majority. Achha, governor has casting vote. I don't know what a casting vote is, and I didn't understand this line. Governor has casting vote. If tied, external members serve 4-year terms, cannot be reappointed. What do you mean? I don't know. So MP's mandate, exactly what are they targeting? So उनका primary objective वही है, maintaining price stability while keeping growth in mind. So inflation and growth को control करना. But the number CPI inflation should be at 4% with band of plus minus 2%. So 2% to 6%. The low flexible inflation targeting framework set by government under RBI Act Amendment 2016. The accountability. If inflation stays outside band for 3 consecutive quarters, RBI must write failure report to government explaining why it failed, what it will do, and timeline for correction. This framework made RBI legally accountable for inflation. Before 2016, RBI had vague multiple objectives with no clear targeting. 2016 was landmark reform. So उससे पहले उनके पास एक clear objective था ही नहीं. It kept on changing. So the MPC meeting process. How does a rate decision actually happen? Step 1 is preparation. So this happens weeks before meeting. RBI staff prepare massive research documents like current inflation data, GDP growth projections, global oil prices, monsoon forecast, global interest rates, US Fed, ECB, credit growth, data, exchange rate movement. Step 2 is the actual meeting, usually 3 days. Day 1 to 2, staff presentations and discussions, and day 3, each member presents their view plus votes. Step 3 is decision, majority vote wins, governor announces decision. Step 4 is minutes published after 14 days, full minutes published, every member's reasoning made public, dissenting votes also published. And when I first read it, I was very excited about like this minutes published thing. I really want to read into it. I want to like search it up over my Google browser, and I want to read it. I really want to read it right now, but no, let's do it this first. But I'm very excited about it. Published minutes are gold, for example. They contain RBI's exact thinking on economy. Reading them equals understanding RBI's language. And also पता चलेगा ना, मतलब प्रोफेशनल वर्ल्ड में ये सब मतलब कैसे काम कर रहे हैं आरबीआई में लोग, उनकी सब मेन मीटिंग की सारी बातें पता चल जाएंगी तो ऑब्वियसली. Okay, so policy stance. Beyond just repo changes, MPC doesn't just change rates, it also signals future intention through stance. Stance क्या होता है? नज़रिया, perspective. I forgot the Hindi word for it, but stance is a POV, is a stance, right? I don't know. So stance and meaning, let's see, and also what it signals to the market. Accommodative. If RBI announces, I am like assuming RBI announces its stance along with the repo rate. So if the stance is accommodative, so RBI is meaning to say that we will cut rates or keep low, and the signals to the market is boosting growth is priority because rates are going to get cuts. So if stance is neutral, then could go either way, and for the market, watching data carefully. Withdrawal of accommodation, so moving towards tightening, high repo rates, inflation becoming concern is the signal to the market, and calibrated tightening is raising rates carefully. Now the signal to the market is fighting inflation actively. Why stance matters more than repo rate sometimes. If RBI keeps rate same but changes stance from neutral to accommodative, markets immediately know cuts are coming. Banks start pricing in lower rates. Wait, तो आरबीआई ने अभी रेपो रेट कट नहीं किया है, बट बैंक ने पहले से ही लोअर रेट पे लोन देना शुरू कर दिया. तो सो व्हाई वुड आरबीआई कट रेपो रेट्स? लाइक पहले ही काम हो गया ना, आरबीआई जो कराना चाह रहा था सिस्टम से वो तो पहले ही सिस्टम ने कर दिया. इकोनॉमी स्टार्ट्स रिस्पॉन्डिंग बिफोर रेट एक्चुअली चेंजेस. देन व्हाई वुड आरबीआई टेक एनी लाइक एक्शन? दिस इज़ कॉल्ड फॉरवर्ड गाइडेंस. आई वंडर, मतलब उसके बाद मतलब लोग पहले शुरू कर देते हैं, इकोनॉमी स्टार्ट से रिस्पॉन्ड करना शुरू कर देती है, बट इफ आरबीआई डजंट कट रेट्स देन what happens? And does RBI actually cuts rates or increases it after like announcing its stance? I don't know, but this is like seems to work. Forward guidance, central bank communication as a tool itself, and I want to see more, like look more into it. How global events affect MPC decisions. MPC doesn't work in isolation. Global factors force their hand. The US Federal Reserve effect. US Fed raises interest rates. US investments gives higher returns. Why? US अगर अपने इंटरेस्ट रेट रेज करेगा, then there would be less dollar in the economy, then dollar की वैल्यू बढ़ जाएगी, so US investment would give high returns. Okay, so foreign investors pull money out of India क्योंकि डॉलर की वैल्यू बढ़ गई है. so शायद डॉलर के कंपेयर में इंडिया मतलब रुपी की वैल्यू गिर गई है, so that is why maybe foreign investors pull money out of India and sell Indian stocks और bonds. उससे रुपी और भी ज़्यादा गिरेगा बिकॉज रुपी की फ्लड आ जाएगी, मतलब इंडियन स्टॉक्स और बॉन्ड्स बेचने से. दे बाय डॉलर, रुपी वीकन्स. imports become expensive. अगर रुपी weakens तो imports become expensive. अगर imports will become expensive then inflation rises in India. So when US Fed raises rates, RBI often forced to also raise rates to prevent capital flight. India's monetary policy is partially hostage. Hostage होता है बंदी to US Fed decisions. This is called impossible trinity. Next section, the impossible trinity. अब ये मुझे बिल्कुल समझ नहीं आई थी trinity, but let's see it. A very important concept. A country cannot have all three simultaneously. Fixed exchange rates, मतलब रुपये की वैल्यू fixed. Free capital flows, money moving in and out freely. What do you mean? मतलब उसके ट्रांजैक्शन पे टैक्स ना लगे, मतलब इज़ द कैपिटल फ्लो नॉट फ्री राइट नाउ. इंडिपेंडेंट मॉनेटरी पॉलिसी, मतलब डिपेंडेंसी ना हो. जैसे अभी US फेड से मतलब काइंड ऑफ हॉस्टाइल है अब हमारा देश, हमारी इकोनॉमी, RBI and all that. So let's see why impossible. Simple logic. Imagine India wants all three: fixed rupee at 83 per dollar, free capital flows allowed. What does it even mean? Free capital flows are allowed. RBI wants to cut rates independently. If RBI cuts rates, Indian investments gives lower returns. So it's good for the Indian people but not good for the foreigners, is it? Indian investments give lower returns. Investors move money to USA, higher returns. Massive dollar demand, rupee should fall, but RBI promised fixed rates must use all forex reserves defending rupee. Eventually impossible to maintain क्योंकि forex reserves कभी तो ख़त्म होंगे ही. So what India chose free capital flows, FDI, FII allowed, I don't know what it is. Independent monetary policy, RBI decides rates but floating exchange rates. So rupee fluctuates, managed float, तो rupee आगे पीछे होता रहता है. But how is it independent monetary policy if we are like kind of hostile to US Fed? Then how is this happening? Anyways, so managed float. RBI doesn't fix rupee but intervenes when volatility is excessive. Okay, not fully fixed, not fully floating, somewhere in between, called dirty float. Informally, this is India's practical solution to impossible trinity. I didn't understand this managed float stuff. Anyways, liquidity management, RBI's daily job. Beyond MPC meetings, जो हर 2 महीने में होती है, RBI manages liquidity every single day. What is liquidity? Simply how much cash is flowing in banking systems. Too much liquidity, banks have excess cash, lend aggressively. Too much money in economy, inflation risk. Too little liquidity. Let's see. Banks short of cash, can't lend, credit crunch, economy slows, companies can't borrow to grow. So RBI's daily tools are LAF, MSF, SDF, and OMO. But OMO was also like in the big tools, right? I don't know. LAF is liquidity adjustment facility. So its purpose is daily borrowing, lending between RBI and banks. So this borrowing, lending thing between banks and RBI happens daily. MSF is marginal standing facility, emergency overnight borrowing for banks. So this happens in emergency. SDF is standing deposit facility. Banks park excess cash with RBI overnight. I don't know. मतलब इसमें एक मिनट, एमरजेंसी ओवरनाइट बोरोइंग फॉर बैंक्स, तो इसमें बैंक आरबीआई से पैसा ले रहे हैं और इसमें दूसरे वाले में बैंक्स पार्क एक्सेस कैश, इसमें आरबीआई को बैंक्स कैश पैसे दे रहे हैं, तो उसमें ले रहे हैं और इसमें दे रहे हैं. सो MSF and SDF. I don't know if I'm wrong or not. Anyways, let's go. OMO, longer term liquidity management. तो फिर डेली टूल्स में इंक्लूड क्यों किया? ये लॉन्गर टर्म में है और ये पहले इंक्लूड कर दिया था, तो मे बी मिस्टेक. इज इट अ मिस्टेक? I don't know. So LAF corridor, the interest rate between SDF and MSF floor and ceiling. Repo rate sits in middle. Bank borrow and lend within this corridor. Comes an exam. I don't know. I didn't understand this LAF corridor thing, but I want to. But I didn't understand it. Understand it. Transmission. Why rate changes take time? This is crucial for phase 2 essays. Monetary policy transmission. How RBI rate change actually reaches you. So RBI cuts repo rate. Banks borrowing cost from RBI falls. This takes weeks. Banks reduce their lending rates MCLR and EBLR. This takes months, then new loan become cheaper. This also takes months, then existing borrower get benefit or reset date. Takes 6 to 18 months total. People borrow more, spend more, economy responds. Why so slow? Banks don't immediately pass on rate cuts. They protect their profit margins. NIM, remember day 6. I don't remember day 6. Anyways, this is why RBI cuts rates, but economy doesn't respond immediately. मतलब बैंक अपना थोड़ा profit पहले बनाते हैं, called transmission lag, 6 to 18 months for full effect. India's specific transmission problem. 45% of economy is informal. Street vendors, farmers, daily wage workers, they don't take bank loans, they borrow from money lenders at 24 to 36%. RBI cuts rates, cuts repo from 6.5 to 6. Money lenders still charge 36%. तो सारा मतलब प्रॉफिट मनी लेंडर अपना बना लेते हैं. Poor people feel zero benefit of rate cut. This is India's biggest monetary policy challenge. Transmission doesn't reach the bottom of the pyramid. Financial inclusion, like Jan Dhan Microfinance, is trying to fix this. Indicators RBI watches the dashboard. So MPC members look at these before every meeting. So इसी का ही मतलब data documents वगैरह बनाते हैं शायद. Okay, so indicator and what it tells RBI. CPI inflation, this is the primary target, वो 4% plus minus 2% वाला. So this check, are we on track? Core inflation, CPI minus food and fuel, because food and fuel will supply side inflation, तो उसमें RBI ज़्यादा कर भी नहीं सकता कुछ. So structural inflation ये सब minus कर देते हैं CPI से. And then WPI, this tells RBI leading indicator. This is the leading indicator. Future CPI direction किधर को जा रही है. GDP growth, is economy healthy or slowing? क्योंकि अगर economy healthy नहीं है और RBI ने मतलब सिर्फ इन्फ्लेशन को कंट्रोल करने के लिए ज़्यादा रेपो रेट्स में चेंज किया, then what if the GDP growth gets out of hand? IIP, Index of Industrial Production, Factory Output. फैक्ट्री आउटपुट आई डोंट अंडरस्टैंड. इससे क्या मतलब. क्रेडिट ग्रोथ, आर बैंक्स लेंडिंग, इकोनॉमी एक्सपैंडिंग. फॉरेक्स रिजर्व्स, एक्सटर्नल वल्नरेबिलिटी. Okay, so rupee movement, import inflation risk, global oil prices, cost push inflation and US Fed rate. US Fed rate और forex reserves अलग है. Capital flow pressure, what do you mean? I don't know. I actually don't know. Monsoon is food inflation predictor, but RBI can't do anything much about it. Then why do they check it? Like, what's the purpose? Food inflation predictor, क्या मिल जाएगा जान के. Food inflation. Core inflation is very important. Food and fuel prices are volatile and seasonal, and they are supply side inflation, so subtract them. Core inflation shows the underlying inflation trend that monetary policy can actually address. Three big questions. You can read them, or shall I? Okay, let me read them. Question number 1 was RBI cuts repo rates by 0.5%, but banks only reduce home loan rates by 0.1% using transmission concepts. Why does this happen, and what can RBI do about it? I've actually already answered. You can pause and read the questions and answers. Let me just scroll a little bit slower. I don't want to read it again and again. Okay. So you just did what actual MPC members do, weighed competing pressures and made a call. Let me grade everything. Question number 1 was correct. Banks protecting profit margins, and I am exactly right. Full answer. RBI cuts 0.5, banks borrowing cost for 0.5, but bank also has fixed deposit at an older rates. I don't know what fixed deposit is. और मतलब रेपो रेट चेंज होने से क्या उस पर कोई चेंज नहीं आता है. Shareholders demanding profits margin. Now I wonder if banks have shareholders. Like banks are owned by Shareholders, what do you mean? Bad loans eating into profits. What are bad loans? I don't know. Bank passes only 0.1% to protect NIM. Okay, so what RBI can do? Your answer: financial inclusion plus formalization. Excellent. This is to include all the people, ताकि सब तक बेनिफिट पहुँचे. और बेनिफिट पहुँचेगा कैसे अगर बैंक्स ही अपने मतलब प्रॉफिट और अपनी कॉस्ट कवर में लग जाएंगे. सो फॉर दैट EBLR सिस्टम केम इन, एक्सटर्नल बेंचमार्क लेंडिंग रेट. सो RBI forced banks to link loans directly to repo rate. Now when repo cuts, home loans must change within 3 months. This was RBI's actual solution. EBLR replaced MCLR. Comes directly in exams. Before EBLR, banks used internal benchmark MCLR and delayed passing cuts. EBLR forced transparency. तो उससे पहले banks were making their own profit. Is it? Anyways, so question number 2 का answer, let's see. First of all, dilemma is a situation where both choices have costs. No perfect answer. I didn't knew the meaning of it, so your reasoning was perfect. Cut rates, growth boost, but rupee weakens. Inflation worsens. Raise rates, rupee stabilizes, but growth slows further. And your governor decision, protect against inflation first, is exactly what most central banks choose, because slow growth is painful but recoverable. But uncontrolled inflation is destroys savings, hurts poor, harder to fix. Inflation priority first. This is called inflation hawkish stance, prioritizing inflation over growth. Opposite is growth dovish, prioritizing growth. These terms come in the MPC minute constantly. Question number 3 is your MPC what? Excellent reasoning. You identified something most students miss completely. Monsoon is supply side inflation. Is RBI can't do much about it anyway. This is next book MPC thinking. Here's your answer upgraded to full MPC style version. Your vote upgraded MPC language. I've got to hold rates unchanged with neutral stance. Why? अच्छा मतलब अच्छा ओके, किसी को भी प्रायोरिटाइज नहीं किया. CPI at 5.8% remains within the tolerance band, providing some room. However, primary inflation driver, poor monsoon and rising global oil prices, are supply side shocks that monetary policy cannot effectively address. Raising rates would tighten financial conditions without resolving the root cause of inflation. Simultaneously, GDP growth at 5.5 is below India's potential of 7% plus, signaling economic slack. Raising rates here would further dampen already slowing growth without inflation benefit. I therefore recommend. I'm sorry, I'm sleepy. Therefore recommend holding rates while closely monitoring core inflation, which remains the true measure of demand. Supply demand side. I therefore recommend holding rates while closely monitoring core inflation. Core inflation was inflation minus like the fuel and food structural inflation, right? So which remains the true measure of demand side pressure that monetary policy can address. If core inflation rises, I would reconsider. On the rupee, RBI should use forex reserves to manage excessive volatility, rather than using interest rates as exchange rate defense tool. Forex reserves, okay, so hold with neutral stance. This is actually what RBI chose in similar situations in 2023. You reasoned to the correct real world answer, but I didn't got to the same conclusions. Anyways, so day 9 done. New terms unlocked today are hawkish, prioritizing inflation control. Dovish is prioritizing growth, and I don't know what stupid and ajeeb si language is this. EBLR is external benchmark lending rate, links loan directly to repo. Forward guidance is RBI communicating future intention as a tool. Impossible trinity is can't have fixed rate, free capital, and independent policies simultaneously. A transmission lag is 6 to 18 months for rate change to reach economy. Core inflation is CPI minus food and fuel. That's structural demand side inflation. What do you mean? Structural demand side inflation. I forgot. Managed float, rupee floats, but RBI intervenes on excess volatility. Sorry. Day 9 done. Tomorrow we are going to see data in Indian financial system, SEBI, stock markets, bonds, mutual funds, insurance, the full ecosystem of how money moves in India beyond just banks. This is also where your earlier question, who really controls prices and wealth, gets answered through financial markets. See you tomorrow. I'm excited. Now, bye bye.